keynote speaker and author of several best-selling books, Digital Bank, Value Web, Digital Human, and of course his latest book, Doing Digital. He's the chairman at the Finanser and an independent commentator on the financial markets, and in recent years has been voted one of the most influential people in financial technology by the Wall Street Journal's Financial News and Thomson Reuters. He's got a long list of accolades. I certainly can't name them all here. Please welcome Chris Skinner, who will deliver a keynote presentation on purpose-driven finance. Over to you, Chris.
Hi, my name is Chris Skinner, and I'm presenting today about the whole role of banking in society. I've spent a long time studying this area, and it is an area that intrigues me in that when you think about banking, it does control society, it controls economies, it controls governments. And that's a critical point, which is why it's so heavily regulated, it's so systemically important. And when we had the last financial crisis in 2008, one of the key issues is that the banks have been operating for pure shareholder interest and profit. And there was a lot of questions asked about why it had driven the banks to behave the way they did and what it meant for societies and economies and governments. And there was a statement in 2009 from Lord Adair Turner, the then chairman of the Financial Services Authority in the UK, that a lot of banking was socially useless. And bankers got very upset about that statement because it kind of was something that felt uncomfortable. But when you think about how many banks behaved back then and still today, they are driven by shareholder return and by quarterly results. And as a result, their principal aim is to sell credit to companies and corporations and citizens who don't necessarily need to have that leveraged credit. And that created huge issues, which led to even more headlines like the payment protection plan scandal in Britain, the Wells Fargo account opening scandal in America, and the Royal Commission into the banks of Australia finding that they were even charging premiums for products that dead people were still subscribing to. And that's something that is wrong. It's morally wrong. And I think that's the big question. If a bank is morally wrong, if a bank is socially useless, can it really play the right role in society and economies and governments? Or does it need to change? Does it need to shift fundamentally to something else? My personal view is it has to over the next decade, and that will be turbocharged by two major issues. The first is the coronavirus we're in right now, and the second is the climate emergency that we have been hearing headlines around for the last few years. Let's start with the coronavirus pandemic, in that has completely driven banks to think about were they ready for digital and digital employees and digital customers, and many were not. I've talked about digital transformation and digital banking for over a decade, and particularly, in fact, when the last pandemic, the last crisis hit, 2008, the financial crisis, when we bailed out the banks. This crisis, we're bailing out the people. But the last crisis, when that hit, I had a strong view that banks would be challenged by technology, and they have been for the past 12 years. The last crisis spawned the whole fintech industry, which is now massive, in that every year the amount of money going into fintech is doubling. Obviously not this year, but for the last decade, it's almost doubled every year. And what that's meant is that we've seen thousands of startup innovators challenging bank structures. And they do that in many ways. They do that around APIs and apps and open banking. And they do that around analytics and artificial intelligence. And they do it around processes. And specifically processes, I think, is an interesting area to focus upon, in that the process-driven financial structure is one that is now here to stay. You see massive breakout companies like Stripe creating billions of dollars of value. Their last valuation was, in fact, just at the end of Q1 this year, $36 billion as we got into the coronavirus pandemic. And that's for a 9-year-old company that's doing innovation around payments through APIs. When they started, there were just a few lines of code. Now they're a global platform. Tomorrow, wait and see. I think for me, it's been fascinating seeing the financial technology markets and how they've changed the nature of finance. They haven't disrupted the banks. They've tried to in many ways, but right now they're still small beans compared to the big banks. But in 10 years, maybe we'll have small banks and they'll be the big beans. We'll wait and see. But the clear thing that's been happening for the last 12 years is a revolution of financial services through technology. And cloud computing drove that. The smartphone has driven that. We couldn't have apps and APIs without those platforms and services. And the cloud computing companies have been huge. And this leads to where we are today in the coronavirus pandemic, which is everybody being locked down, customers, employees, companies. And were banks ready for this? In fact, there were two sorts of banks, those that were and those that weren't. And I've dealt with quite a few that weren't. A good example is a UK bank that I deal with whose call center was based in India. And with India locking down with 4 hours notice and no setup in the UK for any call center, I haven't been able to talk to them for 3 months, which is quite ridiculous. But they weren't ready for digital. They weren't ready for lockdown. In fact, most business continuity planning around physical operations was to have another office. You know, if there's a terrorist attack on the major office, then they had another office. They didn't have this idea of if there was a lockdown of the building, they had to create a digital reach. And now we see all of the big banks committing to cloud computing. I've seen so many announcements just in the last week or so about Google Cloud, Microsoft Azure gaining customers, and Amazon Web Services. And finally, the big banks are moving to digital transformation, digital reach, because they have to. If the employees and all the staff are locked down at home, how can they operate? How can they work? And this is the biggest change that we're seeing, is the move rapidly to digital transformation. And I've just written a book about doing digital, which is quite timely because I spent 3 years researching what banks were doing to be digital and found that a lot of them had lessons that they could share, like DBS, ING, BBVA, JP Morgan Chase, China Merchants Bank, that were really interesting lessons around doing digital. So if you are doing digital and you want to understand cloud and APIs and apps and open banking, I recommend you read the book. Shameless self-publicity. But moving on from there, what's going to happen post this crisis, coronavirus? We've had to move to a digital transformation really quickly, which I talk about as 2030 was delivered in 2020. What happens once we get past 2020? What happens when we go back to the new normal? What is the new normal? And in building up to this coronavirus crisis, we had a lot of issues with a lot of discussion around the climate emergency, climate change, which is my second big theme. So digital transformation, the 2008 financial crisis, the big recession that's coming right now in 2020 because of the coronavirus crisis. Post this, it's all going to be around going back to the challenge we have about how to reset planet Earth. And about 71% of the carbon emissions that have been destroying planet Earth are created by just 100 companies. They are the companies you'd expect, the Exxons, the Shell, the BPs of this world, the fossil fuel firms. And they're the companies that have been destroying planet Earth because they've been taking our resources and burning them. Oil, gas, and that's what we have to deal with in the future if we want to do a great reset of our planet. We all may admire people like Elon Musk and the fact that he's trying to move us to battery and electricity fueled transport and maybe moving to Mars. But the bottom line of what's happening is that the banks are the companies that control the activities of these 100 companies. In fact, if you narrow it down further, about half of those emissions came from just 25 companies. Now, we can't close down those companies overnight. And Anna Botan, the executive chairman of Santander Group, made a great statement, because I'm living here in Poland, and my wife is Polish, so that's part of the reason why I'm here. But Poland is fueled by coal. You cannot just withdraw the funding of coal companies tomorrow because Poland was shut down. What you have to do is create a way of enabling Poland to move to a green economy. And the banks can encourage that activity and start to provide encouragement towards green projects against the projects that are destroying planet Earth, to reset the climate emergency. And that's a great point, which is, this is not something you can just flick a switch and shut down overnight. You have to do it slowly but surely, but you have to do it. Otherwise, our children and our children's children won't have a planet to live on. I was at a recent event where a pension fund manager said he's really worried that he won't have anyone to pay pensions to. So as a result, they're focusing upon investing in companies that do well for planet Earth and avoid destroying this world that we live in. One of the great companies that I've dealt with, surprisingly for some, is a Chinese company called Ant Financial, part of Alibaba Group, that provides the Alipay services in China. I'm a big fan of what they do. And I was very struck when I walked around their office that they had a sign saying, do good for society and good for the planet. Do good for society, do good for the world. This to me is a key message. And they don't just talk it, they walk it. I mean, the Ant Financial Alipay app has this amazing thing within it called Ant Forest, which is a game. It's one of the biggest multimedia playing games in the world within an app. And it encourages people to be green. It gives you rewards if you walk to work or cycle to work instead of catching a bus or a taxi or driving. It gives you rewards if you recycle instead of just throwing things away. It gives you rewards if you use sustainable products versus non-sustainable products. And these to me are key activities. I could talk about this game for ages, but the gist of the game is that you get a tree planted for when you achieve a level of points, let's say 1,000 points. And you get those points by behaving and paying in a sustainable way versus non-sustainable. You can get points that you can take off other players in your friends' community if you see them doing something that's unsustainable. And so China's moving very quickly to being a sustainable economy through sustainable finance. And I think there's a number of layers in here that are really important. But a key point is that Ant Financial Alibaba has a purpose. Do good for society, do good for the planet. And this purpose is something that's going to develop into the nature of how our world looks over the next decade, not just within Ant Financial, Alibaba and China, but within every company. Do you have a purpose? And is your purpose something that I can relate to? And does it do good for society and good for the world? Or is it just for shareholder return and profit? Is it socially useful or socially useless? In the latter case, you will find many, many, many employees and customers are going to walk away. I have said many times that banks and financial institutions that were not ready for digital would find customers will walk away over time. And this crisis, the lockdown, is going to turbocharge that feeling. During this lockdown, with my bank I couldn't talk to for 3 months, I've switched to a new bank, a digital bank. And it was really easy. I mean, it took me about 10 minutes. It's all within the app. It's on the phone. It's really simple to do. And post this pandemic, if I see a bank that's only focused on shareholder return, profit and greed, then I believe, and it is purely my belief, that backed by Greta Thunberg and millions of other young people, that that's unsustainable. You know, if you invest in and lend to fossil fuel companies that are destroying this planet and don't encourage them to do good for this planet through offsets and moving to green, then that's unsustainable. If you destroy the environment for our animals and wildlife so that orangutans and other wildlife are all going to die out, that's unsustainable. We need to protect the beauty of what we have in this world. And the financial institutions are at the heart of that. That is their job. If they think their job is just making money, then that's unsustainable, because this world will disappear. Our children and grandchildren and our pensioners will have no pensions. There will be nothing. So sustainable finance sounds like a really boring subject, but it's absolutely critical to the future of everything. And the purpose is really critical to the future of everything. This is my new project I'm working on, and I've not spoken about it before in a public environment, so this is the first time. And I'm firmly of the belief that the more a company has clear values about doing good for society and good for the planet, being socially useful, the more attractive they will become to customers and employees. Now, we've had ethical banks and a lot of discussion about this in the past, and they haven't been so attractive. They haven't gained that traction of customers. And I guess it's because the customer's not been that bothered. Are they bothered now? Would they be bothered if that was a clear statement of intent and action? And it mustn't just be lip service. I mean, there's really interesting action that happened at the end of 2019, organized by Jamie Dimon, the chairman and executive officer of JP Morgan Chase, which was the Business Roundtable's stakeholder manifesto, saying that we have to be focusing on all stakeholders, not just on shareholders. And almost 200 American businesses signed up to this manifesto. And within days, we saw several of the companies signed up to the manifesto, laying off staff and just focusing on shareholder return and looking after their investors. You have to deliver the action, not just say the words. You have to walk the walk, not just talk the talk. And I think that's one of the big things that upset me when I saw that stakeholder manifesto, in that I thought it was something that people brought up to, but it was just words. And you know, around the same time, November 2019, the United Nations issued the Principles of Responsible Banking, which almost 200 banks had worked on and signed up to. And yet several of those banks I've seen clearly doing actions that are in shareholder return focus, not in stakeholder return focus, not being responsible, but being irresponsible, investing in fossil fuel companies and not encouraging those companies to go green. Looking after fracking, for example, it's a fracking bank. I don't want to deal with a fracking bank. I want to deal with a green bank, an ethical bank, a bank that's protecting the future of not just me, but actually more importantly of my children and my grandchildren, and of the planet and of society. Being socially useful, not being socially useless. This to me is the most important fundamental thing of the next decade post the pandemic. The pandemic's driven us to be digital rapidly, to move to cloud quickly, to become an open bank, to do all the things we were prevaricating about, that we didn't bother about because it wasn't important, because we didn't understand technology, because we're bankers. The next decade, move past digital and you look at ethical, socially useful, environmentally good. This is the most important agenda of the next decade. I hope you get it, and I'm really delighted to take questions. Thank you.